This is Nightly Business Report with Sue Herrera and Bill Griffith.
At a crossroads, stocks drop sharply to end the week as bond yields rise and investors try to figure out what's next for this market. Electric results. GE surprises investors with much stronger than expected earnings. Is the worst finally behind the troubled industrial? Nothing to sneeze at. Allergy season is in full bloom, and that is big business for some major drug companies. Those stories and more tonight on Nightly Business Report for Friday, April 20th. Good evening, everyone, and welcome. I'm Sue Herrera. Bill Griffith is off tonight. It was a rough way to end the week. Stocks fell sharply as bond yields rose. The yield on the 10-year hit its highest level since 2014. Apple's 4% drop dragged the technology sector lower after Morgan Stanley said it expects the company's iPhone sales to disappoint. At the close, the Dow Jones Industrial Average fell 201 points to 24,462. The Nasdaq was off 91 and the S&P 500 lost 22. Despite today's declines, stocks were higher for the week. And now that we're a few months into an unusual year on Wall Street, many are trying to figure out what happens next. So Mike Santoli went looking for some answers.
The stock market finds itself once again at a crossroads. Nearly 3 months after reaching a peak, the S&P 500 index is about flat for the year and roughly halfway between that record high and the low of early February. Volatility readings have come down sharply as the market has stabilized, yet the indexes remain far jumpier than they were all of last year. Corporate earnings are quite strong, even better than lofty forecasts, yet investors have not rewarded good results with higher share prices across the board. The market's indecision reflects a struggle to sort out several conflicting factors. Tax cuts and a sturdy global economy are enriching companies and helping consumers, yet those same factors are pushing interest rates higher. The 10-year Treasury has climbed back to 2.95%, its high for the year and a level last seen 2 months ago. The S&P has been caught near or below its current level each time bond yields have been this close to 3%. A surge in oil and other commodity prices and reports of upward pressure on wages have revived inflation concerns and boosted expectations that the Federal Reserve will look to raise short-term rates several more times in the next couple of years. And concerns about big tech stock valuations and the risk of hostile regulations for powerful Silicon Valley companies have slowed this leadership sector of the market, which accounts for nearly a quarter of the S&P 500's value. While these factors have kept stocks in this neutral zone, the market has made progress on some fronts. The indexes have held above those February lows throughout all the trade war and political noise of recent months. The valuation of the market has also come down nicely as stock prices have stagnated while earnings have grown fast. And investor sentiment is a good deal more subdued than it was in January, which is usually a necessary condition for stocks forming a durable base. Taken together, it means the market is approaching the one-third point of the year, clinging to its long-term uptrend, but with plenty to prove before investors can be sure that this was just a routine correction or that it's over. For Nightly Business Report, I'm Mike Santoli.
And as bond yields head higher, Federal Reserve Governor Lael Brainerd today said the economy is strengthening and appears capable of withstanding gradual interest rate increases. She's also pleased to see inflation moving towards the central bank's target.
Today, actually, inflation is moving more in line with what one would expect at this point. In fact, there, I think, we are looking carefully at inflation and expecting to see it move towards target in line with our objectives.
So with inflation and interest rates ticking higher, how can investors protect their money and maybe even profit? Bob Pisani did some digging.
Can you protect yourself against inflation and higher rates? In the last several years, the ETF business has expanded dramatically with more than 2,000 products in all corners of the market. With rates moving up and inflation issues prominent, is it possible to purchase products that benefit from inflation? You can, but it's tricky. One of the beneficiaries of inflation concerns has been commodities, so oil stocks and steel and aluminum producers. Fortunately, there are ways to play the trend. The Oil and Gas Exploration and Production ETF, XOP is the symbol, is a basket of companies that explore for oil and gas. It's up over 10% this month. And you can play this in an even broader way. The Van Eck Natural Resources ETF, the symbol is HAP, invests in oil and gas producers, but also miners and agribusiness stocks. It's up 4%. You could even get more exotic. How about timber? PowerShares Global Timber ETF, the symbol is CUT, C-U-T, invests in timber companies like Weyerhaeuser and International Paper. Why? The theory is that timber-related products have been seen as hedges against inflation in the past. Now, commodities are not the only play on inflation. Some are buying variable rate loans, which rise as interest rates rise, using ETFs like the PowerShares Senior Loan Portfolio, the symbol is BKLN. Others are trying to short Treasury bonds using ETFs. This is a further bet, essentially, that interest rates will rise. A lot of choices out there. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
The rise in bond yields means mortgage rates are going up. And as Diana Olick reports, the timing couldn't be worse for a housing market that's already facing a number of headwinds.
Buying a home just got a little more expensive, and this is a big weekend for buyers as real estate agencies and home builders are running big spring promotions and sales. Mortgage rates, which loosely follow the yield on the 10-year Treasury, hit their highest level yesterday since the end of March, breaking out of a tight range where they'd been sitting for a while. The move came as bond yields surged higher. While the increase won't mean a ton in terms of the average monthly payment for a home buyer, it could be signaling the start of another steady rise, which we saw at the start of this year. And that can take an emotional toll, not just on buyers, but on sellers as well. As rates rise, fewer homeowners will want to sell and buy another home because they would likely be giving up record low rates in the 3% range to move and pay on a rate closer to 5%. The entire nation is in the midst of a supply crisis, and home builders are not ramping up as much as hoped because of higher costs for materials and a labor shortage. That's just pushing home prices ever higher. For Nightly Business Report, I'm Diana Olick in Washington.
General Electric was the best performing stock on the blue chip Dow index, and it's been a while since we've been able to say that. This after the company reported earnings and revenue that exceeded expectations. The CEO says the quarter represents a step forward in that company's turnaround. Investors breathed a sigh of relief, sending shares up nearly 4%. Morgan Brennan has more on GE's results.
The Dow's oldest component reporting earnings and revenue that beat expectations, and it reaffirmed its outlook for full-year profit and cash flow. On a conference call with analysts, GE CEO and Chairman John Flannery calling the results his first report card, saying, quote, "We see signs of progress."
There's no change to our framework of $1 to $1.07 earnings per share and $6 to $7 billion of free cash flow. We expect earnings pressure in power will be offset by better aviation and better healthcare earnings and lower corporate costs.
Flannery, who took the helm last August, has been aggressively cutting costs. He's also moving forward with billions of dollars worth of divestitures, including the locomotives unit and GE's iconic lighting business. The updates were welcomed by Wall Street because after months of disclosures, charges, and negative revisions, no news has become good news.
I think what they're going to be able to do is look back on 2018 as the bottom, right? And 2019, even if power markets don't recover, they're finding a way to take cost out in an aggressive way to still drive margin expansion despite weak power markets. And that's really the trick, as well as looking at the portfolio a little more objectively.
When it comes to that portfolio, Flannery again saying all options are on the table, with a bigger update on the long-term future of the industrial conglomerate expected in the coming months. Next on tap, the company will host its shareholder meeting next week to bring in new directors to its corporate board. Meantime, GE stock did finish the day higher. For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.
It is time to take a look at some of today's upgrades and downgrades. Twitter was upgraded to buy from neutral at MKM Partners. The analyst cites factors including user growth and Twitter's mass market potential. The price target was increased to $40. Twitter shares rose 1% to $31.91. Darden Restaurants was upgraded to outperform from market perform at Bernstein. The analyst expects Darden's Olive Garden restaurants to perform well and cites long-term margin expansion. The price target is $105 per share. The shares were up more than 1% to $91.05. Tractor Supply's rating was raised to overweight from neutral at Piper Jaffray. The analyst there citing improving business trends in the agricultural industry. The firm's price target on the specialty retailer is $72 a share. The stock rose just a fraction to $60.33. Still ahead, 'tis the season for sneezing and sniffling.
Spring is here, and that means allergy season is upon us. Coming up, a look at why your allergies may be getting worse and at the big business of allergy medicines.
As many as 1.5 million SunTrust customers may have had their data compromised after an employee stole client contract lists. SunTrust CEO said the employee, who has since left that company, was working with a criminal third party when those lists were taken. Separately, the bank reported earnings which topped expectations. Last night, we told you that regulators were close to fining Wells Fargo $1 billion for forcing customers into car insurance and charging mortgage borrowers unfair fees. Today, that record fine became official. The bank will pay $500 million to the comptroller of the currency and $500 million to the Consumer Financial Protection Bureau. The fine is the largest ever imposed by the CFPB. The Justice Department has reportedly opened an antitrust probe into potential collusion between AT&T and Verizon. According to the New York Times, regulators allege the companies worked together to make it more difficult for consumers to switch wireless carriers. The investigation was opened 5 months ago. Both Verizon and AT&T fell on this down market day. Other reports said Sprint and T-Mobile also received requests from the Department of Justice. One of China's top telecom companies is crying foul over the U.S. government's decision to ban American firms from providing components or software to ZTE. As we reported, the ban was imposed this week by the Commerce Department, and as Eunice Yoon reports, ZTE is making its opposition known.
ZTE's chairman called a press conference today to protest a 7-year ban imposed by the U.S. Commerce Department. The ban blocks American companies from selling components to the Chinese smartphone maker. ZTE pled guilty last year for violating U.S. sanctions by supplying to Iran. The company agreed to pay a hefty fine of $900 million and to take steps against the employees involved. At the press conference, the chairman admitted to being slow to fulfilling the settlement, but said the punishment didn't match the crime. Such sanctions could put the company into a coma, he said. We resolutely oppose such an unfair, unreasonable punishment, and especially the act of politicizing trade. The smartphone maker said it would use all legal means necessary to safeguard its rights. There are two competing reactions in China to ZTE's case. One is the attempt to whip up nationalist sentiment to support the company and China's high-tech industries. In the state media, the China Daily ran a headline that reads, "The U.S. action against ZTE aims to hit China's 5G advantages." At the same time, the case has shaken up some people here about the dangers of getting into a trade war with the United States because they realize that the U.S. makes a lot of products that the Chinese need. On social media, one user said, "From this, I learned how big a gap there is between China and the U.S. in tech development." Another says, "Only when you have high tech can you have a say." Experts here have been calling for China to speed up its efforts to develop its own homegrown chip industry. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Honeywell hikes its forecast for the second time this year, and that's where we begin tonight's market focus. A strong quarter helped by strength in the company's aerospace business prompted Honeywell to raise its guidance for 2018. Honeywell also said it's taking aggressive action to mitigate any negative impact caused from the new tariffs on imported steel and aluminum. Shares rose more than 1.5% to $150.57. Stanley Black & Decker topped sales expectations, but investors were disappointed to see a drop in quarterly profit and a weaker full-year outlook. The tools maker said the new guidance was the result of an acquisition and a tax charge. Shares finished down more than 6% to $144.21. Schlumberger said strength in nearly all of its divisions helped earnings and revenue top expectations. The oilfield services company also warned the industry will face supply challenges this year and will need new investments to offset a shortage. Shares of Schlumberger fell about 1.5% to $69.23. And the activist hedge fund JANA Partners disclosed a 9% stake in Pinnacle Foods, saying it plans to talk to the owner of Bird's Eye and Duncan Hines brands about exploring a potential sale. JANA also plans to nominate new directors and suggest ways that Pinnacle can cut costs. Shares of Pinnacle Foods jumped nearly 10% to $60.58. It is time now for our weekly market monitor, who has names of stocks he says are the #1 winners of the digital economy. The last time he was on, back in October, he liked Facebook, which is down 5%, Esperion Therapeutics, which is up 55%, and Wave Life Sciences, which is 96% higher. Joining us is Mark Lehman, president of JMP Securities. Welcome back. Nice to see you, Mark.
Thanks, Sue.
And congratulations on a couple of those picks. We think that that's terrific that you're giving our viewers that kind of advice. Let's start with, you're talking about the digital economy, and there have been a number of challenges in the digital economy lately, and some of it involves one of your picks, which we'll get to in a second, but you like Amazon. A lot of people think that Amazon has run pretty far, pretty fast.
Well, they're right, and it has been in the news as of late, and it has run a lot. But it's one of those names I think you want to continually watch, and if you have an opportunity like we've had earlier this year when it was in the news for other reasons, and you got a chance to buy it much lower than it is today, that's where you want to pay attention. It has moved a lot, and it's a volatile name, and when you have volatility, you have an opportunity potentially to buy it at a much more reasonable price when you think the fundamentals won't change, and I think that's why Amazon's the top of our list here at JMP Securities.
Okay. The one stock that has also been in the news that I was referring to a second ago is Facebook, and you're taking a bit of a contrarian view on this one.
We are, and it has been in the news as of late. Everybody knows Mark Zuckerberg's testimony in front of Congress. But the stock, I think, is much more reasonably priced despite all the headlines and all the headline risk. I think there will be some regulation. I think there'll be some self-regulation that I think Facebook will go through. But the juggernaut that they have with the consumers and the juggernaut they have with advertisers, I don't think is going to change. And I think you have a stock at a much more attractive valuation. I think you need to ignore some of the noise that you'll get with the current quarter and know that you're still buying a winner at less than 20 times earnings. And that's a stock, again, that I think is the winner in the digital economy. And you got a chance to buy it cheaper, you should.
Okay, but as an investor, you need to be aware that there may be some headline risk with that name, right?
Absolutely, and I think you probably haven't heard the last of it. I think there's definitely more self-awareness that they're going through. But I'd pick Mark Zuckerberg and his teammates any day, and I think the juggernaut that they have with their couple billion users and their million daily active users, you want to be a part of.
Okay, we'll wrap it up with Zillow Group. Why do you like it?
It's another company that's at the top of their game in terms of the sector they're in the real estate market. It has gone through a little bit of consternation as of late. They've talked about expanding some of the breadth of their products lately. It's caused the stock to deteriorate a little bit from its recent highs, but it is the #1 brand in that sector, in that real estate market. All the consumers know that name. And I think as they continue to expand their offerings, it's more reasonably priced today. And I think 6 months, 9 months down the road, you're going to want to own that stock. Here at attractive levels, it's a good entry point.
All right, we'll leave it at that. Mark, thanks so much.
Thank you.
Mark Lehman with JMP Securities. And you can read more about his stock picks on our website, which is nbr.com. Well, it is spring, and as the temperatures rise, so does the pollen count. And that means millions of people will turn to allergy medicines to alleviate their sneezing and sniffling and watery eyes. And that is big business for a number of companies. Meg Terrell has more.
Each spring, the National Cherry Blossom Festival draws more than 1 million visitors to Washington, D.C. Visitors like 74-year-old Sandra Zarkowski, who loved the view, but hated the way it made her feel.
It's deceptive when you see something so beautiful, and it really knocks you right over. You can't sleep, you can't breathe, but I cope.
Zarkowski is one of 50 million Americans who suffer from seasonal allergies, which cause irritating symptoms like stuffy nose and itchy eyes, but also more serious effects, from coughing and wheezing to asthma attacks. Dr. Purvi Parikh, an allergist at NYU, says seasonal allergies are getting more severe.
Climate change is a big reason for that. Because our carbon dioxide levels are now higher, the pollen is much more potent, and the plants are almost producing super pollen, and the seasons are much longer.
Allergy medicines are big business for the pharmaceutical industry, drawing more than $2.6 billion in U.S. revenue in the last year, according to data from Nielsen. That's just for over-the-counter products like J&J's Zyrtec, GlaxoSmithKline's Flonase, and Bayer's Claritin, and doesn't include prescription medicines. The cost for consumers can add up. Sandra Zarkowski uses a prescription inhaler that she says costs her $50 out of pocket.
There are people that cannot get relief because they can't pay the price.
But for her and other allergy sufferers, like 26-year-old student and waitress Jessica Fuentes, going without allergy medications is not an option.
I'm just going to be like waterfall of just boogers all over the place, I guess. It's just an uncomfortable feeling.
Here's wishing everyone a less sniffly spring. For Nightly Business Report, I'm Meg Terrell from the New York Botanical Garden, Bronx, New York.
Coming up, the new race to get to space.
I'm Morgan Brennan in Colorado Springs. It is the biggest space conference of the year and one of the hottest topics, Blue Origin's rocket engines. We catch up with the space company created by Jeff Bezos to talk about space tourism, its next generation rocket, and technology. That's coming up on Nightly Business Report.
Here's a look at what to watch next week. On Tuesday, Dow Components, 3M, United Technologies, and Verizon will report quarterly results. On Wednesday, we'll hear from blue chip Boeing. And on Friday, a look at how much the economy grew in the first quarter. And that is what to watch for next week. President Trump criticized OPEC and the cartel's role in pushing up oil prices. He wrote, quote, "Looks like OPEC is at it again. With record amounts of oil all over the place, including the fully loaded ships at sea, oil prices are artificially very high. No good and will not be accepted," end quote. That tweet sent oil prices lower earlier in the day, but they recovered and settled slightly higher. OPEC Secretary-General has said that the organization does not have a price objective, but is working to restore stability to the oil markets. The FAA is issuing an emergency directive ordering inspections of more jet engines like the one involved in the fatal Southwest accident. The new order goes beyond what was previously proposed. Engines with a high number of takeoffs and landings must complete the inspections within 20 days. European regulators are also issuing a similar order. Private American companies are competing to become leaders in the new space race and, in the process, phase out our reliance on Russian parts. One of those companies is Blue Origin. Morgan Brennan is back with us tonight, filing this report from Colorado Springs.
Meet Blue Origin's new rocket engine, the BE-4. It represents a crucial step toward intergalactic dominance, but it's also a matter of national security. I think a lot of Americans don't realize that some of the most sensitive security and military missions right now in terms of space are being powered by Russian-made rockets. Yeah. So this actually represents really kind of a shift in terms of American manufacturing. What's the opportunity there?
The opportunity is to replace those rockets and get onto American rockets flying American astronauts and American payloads. And so it's exciting to actually do that. This is actually something that we developed on our own dollars. So we're excited about the commercial opportunities that that's going to give us.
Bob Smith is CEO of Blue Origin, space startup created by Amazon's Jeff Bezos. At the Space Symposium in Colorado Springs, Smith showed off the new technology in his first on-camera interview since taking the helm last year.
We spent so much time in developing this, over 7 years developing this engine, to make it reusable. This engine will actually perform 100 starts, meaning 100 full missions that we'd actually be able to go do.
The company developed the engine for its own rockets, which are expected to begin launching satellites and other payloads into orbit as soon as 2020. But the company also hopes to sell them to United Launch Alliance, or ULA, the industry consortium owned by Boeing and Lockheed Martin.
Liftoff.
ULA currently relies on Russian engines. Lawmakers want those phased out. So ULA is developing its own new rocket.
We're going to fly Vulcan in the middle of 2020. We're so excited about that. We'll begin introducing reusability elements just a couple, 2-3 years later. and then whole new technologies in an advanced upper stage.
Blue Origin is competing against Aerojet Rocketdyne to build the engine for the Vulcan, a contract it's expected to win when a decision is announced, quote, soon. Smith says it would mean a new revenue stream and fit into a broader strategy taken from the Amazon playbook.
Amazon goes and builds capabilities, gains some customer base, and continues to build on that. We're going to do the same kind of that strategy of building capability after capability and making sure that we get customer adoption as we go along.
Blue Origin is already courting customers for its own rocket, and its space tourism ambitions, plans to carry paying passengers past the edge of space, could take flight as soon as this year. It all speaks to the unprecedented role the private sector is playing in this new space race, as billionaire visions now become reality.
Well, I think we'll have, obviously, flying space tourists. We'll be flying suborbital payloads as well. We'll be, I think, the preeminent engine provider in the country. And then we'll also have our New Glenn vehicle that we'll be using not only for civil and commercial, but also for national security payloads as well. So I think at that point we will be in very much the position that we want to be as we stand today.
For Nightly Business Report, I'm Morgan Brennan in Colorado Springs.
And before we go, here's a look at the day and the week on Wall Street. The Dow fell 201 points. The Nasdaq was off 91 and the S&P 500 lost 22. For the week, the major indexes were all fractionally higher. And that will do it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great weekend, everybody. We will see you right back here on Monday.